Do you know who Mike Tyson is? This world champion in boxing made at least $300 million over his career. But Mike Tyson once declared bankruptcy and was in debt for around $30 million. How could that happen? This answers the question on our thumbnail today. If you don't learn what we're going to discuss, you could be poor for the rest of your life. Just imagine, you earn $300 million and all of it is gone. It's foolish, right? You can make as much money as possible, but if you don't know how to manage it, you'll always be poor. Now, let me ask you, what do you think money is? Is it just something that comes to you, and as soon as it arrives, you send it away? Or do you see money as something you need to carefully take care of? Or maybe you think it's something you should spend, or something else entirely. So, before you learn to make money, you need to understand what money means to you and learn how to manage it. Because what's the point if you make $100,000 every month, but at the end of the month, you have nothing to show for it? What's the use? Today, we're going to learn about how to handle money. This isn't something taught in school or college. Alright, before we start, let me ask you one thing. What do you think money is? Or what does money represent to you? Think about it when you shop online or when you receive a paycheck. What does money mean in those two scenarios? Exactly, money is a medium of exchange, a tool that facilitates the buying, selling, and trading of goods. That's the textbook definition. To me, though, money represents value. When you choose between restaurants, there might be options from $10 to $15 per meal. The restaurant you pick reflects your perception of the food's value. So, if you go for a $10 restaurant, you believe the meal's value matches that price. If it's $15, you might feel it's too expensive, while a $5 meal might seem cheap, but not necessarily good. So, money represents value. Why is understanding this concept important in life? Because once you understand it, every decision you make with money will be based on your perception of value. I'm sure many of you get this so far, except maybe those who live paycheck to paycheck, are in heavy debt, or are hooked on unproductive habits like online gambling. I'll discuss that more later, but now I'll ask the second question. What is your relationship with money? Most people, myself included, see money come into our wallets, only to slowly disappear bit by bit. This means our relationship with money is simply about income and expenses. Let's say you earn $6,000 a month and have been working for 3 years. So, $6,000 times 12 times 3 equals to $116,000. Now, out of this total income of $216,000, how much do you actually have left? If it's not much, then your issue is with consumption. In 2017, 78% of Americans were living paycheck to paycheck. So, if you're living paycheck to paycheck, the problem lies in your spending habits. This means that before learning to make money, you need to learn to control your spending so you don't end up like Mike Tyson. No matter how much you make, if your money management is poor, it will disappear. People like Mike Tyson, when they want something impressive, say, price that costs $10 to $50, they look for something worth $200, and especially for those addicted to things like slots, it often starts with just a $200 or $500 deposit. But over time, that can grow to $3,000, half of their own income. Next, we'll discuss a trap that we all have experienced or will experience in life, the money trap. This trap is like a circular running track. We keep running, but only go in circles, like a vicious cycle. You work 5 days a week, get paid once a month, and when the paycheck hits your account, the money is nearly gone in a day, whether for necessities, celebrations, loan payments, or, at worst, online gambling. On the first, you receive $6,000. By the third, it's down to $2,000, and that has to last you the whole month. Isn't that foolish? And yet, we keep doing it, month after month, year after year, or even for a lifetime. Since I compared it to a circular running track, let's think about stamina limits. After 3 laps, you might be exhausted, fall ill, and even lose your job. Then what? Meanwhile, you've just taken out a 5-year car loan or a 15-year mortgage. You're in trouble. Even if you're physically resilient with strong stamina, can you really keep running for 100 laps? And can you guarantee that your mental health will remain stable after those 100 laps? Alright, let's continue with the money trap. If you realize that you're caught in the money trap, you need to get out immediately. The way to do this is by improving your relationship with money. The first step you can take is to track all your expenses, rent or housing costs, transportation, food, essentials, entertainment, and so on. The point is, you need to understand yourself, your expenses, and your consumption habits. Once you understand this, the next step is budgeting, or setting a target for how much money you should be spending each month. By setting a budget, you can systematically identify what's unnecessary and cut it from your expenses. The leftover money can then be saved or invested. If you're not ready to start a business yet, here's a projection for the next 6 years. By 2030, at the peak of the demographic bonus, the economy will become even more challenging. If you're not able to manage your money or assets now, you'll likely struggle in 2030. I'll cover the details another time, but for today, let's focus on understanding money. Alright, moving on, another tip. Before you decide to invest or start a business with your leftover money, make sure you've built an emergency fund, just in case you're laid off, get sick, or face any other emergency. So, you need to control your lifestyle, live within your means, and avoid living a lifestyle that's far above your income. If you do that, I'm sure you'll be in debt within a year. But don't get the wrong idea. I'm not saying buying an expensive car, jewelry, the iPhone 15, or other luxury items is useless. What I mean is to buy according to your income level. Or, if you want to buy something beyond that, make sure you've saved up for it over time, not just from your paycheck that month. So, it comes back to you. Do you want to look like you have money, or actually have money? Alright, now let's get into increasing income. From my experience with money, cutting expenses is much easier than boosting income. But since this is crucial to our lives, I'll touch on some ways to increase income, just an overview for now, and I'll go into more detail in another video. First, the business route. This is the fastest way to earn money. Here's a simple breakdown. Understand the market. Identify a problem within it. Find a solution for that problem, then sell that solution to the wider public. That's the business path, but not everyone is willing or able to go down this route. Second, the investment route. This is straightforward. Every day, learn about investing, and each month put your extra money into an investment instrument you've analyzed. If you make a profit, you can withdraw it. If you lose, you can manage the risk. This approach is easy and accessible to anyone. So, to summarize, first, you need to understand yourself and your spending habits to control your expenses. Second, you need to set a budget or start budgeting. Third, use your leftover money to explore other ways to increase income. It's that simple. When it comes to putting it into practice, that's up to you whether you can or can't do it. Alright, That's our lesson for today. Don't forget to like, share, and subscribe.